Hello everyone, let's talk about your final project, which is due at the end of week 4, at the end of the course. It's a big project and it's going to work a lot better if you work on it bit by bit throughout the course. So each week I will give you some specific tips on what to include in your final project, how you might want to format it, and so forth. What follows is an overview of the assignment. Your final project, of course, is to be a well-researched and professionally written essay. At a minimum, your essay must address the following topics from the assignment. You're going to be analyzing the role of the banking sector and how it contributed to the start and escalation of the financial crisis and the subsequent recession, of course, going back to the 2007-2009 period. Make sure you examine the specific banking products which contributed to the problems, and I'm going to follow up with some detail on each of these points. Your project should also evaluate the tools and actions of the Federal Reserve, that's right, the U.S. Central Bank, as well as the U.S. government during the crisis and post-crisis. Specifically, your paper should address whether or not these outcomes did indeed create a safer and more secure financial system. Thirdly, you should be evaluating the loan policies and the depth of the risk management strategies of the banking system prior to the financial crisis. Answer the question of whether or not these policies contributed to or made worse the ensuing situation. And be very specific and include examples, of course. And then finally, your paper should examine the legal and ethical issues that came out of the moral hazard associated with the banking crisis. And in particular, make sure you address the decision to allow Lehman Brothers to go bankrupt, even though other banks were given government bailouts. Keep in mind, this final project is a huge part of your course grade. It accounts for 20% of your overall grade for the course. So definitely give it your best effort, do your best work, and whatever you do, do not skip the final project. It weighs a lot more towards your final grade than the other essays do. So you shouldn't skip anything, but in particular, don't skip the final project. You'll start by drafting an introduction to the financial crisis and the role of the banking sector. Specifically, you should provide a brief overview of the 2007-2009 financial crisis and how it impacted the housing market. Be sure to highlight the significance of this event in economic history. You'll be analyzing how the banking sector contributed to the onset and escalation of the crisis, focusing on specific banking products such as subprime mortgages, mortgage-backed securities, and collateralized debt obligations. A few other thoughts as you start your project. So the financial crisis of 2007 through 2009 was significantly fueled by the actions and practices within the banking sector. For instance, the widespread issuance of subprime mortgages, often bundled into complex financial products like mortgage-backed securities and collateralized debt obligations, led to some heightened risk exposure for financial institutions. These products were marketed as low-risk investments, but were actually backed by risky mortgages, contributing to the destabilization of the financial system. The U.S. housing market bubble and subsequent burst. For this part of your paper, discuss the formation and bursting of what came to be known as the housing market bubble in the United States. Be sure to highlight the causes and the contributors to this particular phenomenon. Next, discuss how banks were overextended on their mortgage portfolios. In particular, explain how banks became overextended, leading to solvency issues as borrowers defaulted on these mortgage loans. Be sure to also emphasize the impact of this overextension on the stability of financial institutions. There were some consequences for people and the economy. Make sure you address these consequences resulting from the housing market collapse, including this loss of home homes and jobs for millions of people, as well as the ripple effects on the broader economy. The government also played a role by intervening, so describe their intervention efforts and how these were aimed at mitigating the economic impact of the crisis. Be sure to evaluate the effectiveness of these interventions in stabilizing the housing market and the overall economy. Next, focus on attributions of blame to the banking sector by examining the prevalent blame directed towards the banking sector for causing the subsequent recession. In your analysis, explore whether banks were solely responsible for the crisis or if and which other factors also played a significant role. Some other things to keep in mind. During this time, the U.S. housing market experienced a dramatic rise in home prices during the mid-2000s, fueled by factors such as low interest rates, relaxed lending standards, and speculative buying. This rapid escalation led to the formation of a housing market bubble characterized by inflated property values and unsustainable mortgage practices. As the mortgage bubble burst, banks found themselves overextended on their mortgage portfolios, unable to withstand the wave of defaults from borrowers. This resulted in significant losses for financial institutions and posed a threat to their solvency. Consequently, millions of people lost their homes and jobs, exacerbating the economic turndown. In response to the crisis, the government intervened with measures aimed at stabilizing the housing market and bolstering economic recovery. These interventions included initiatives like the Home Affordable Modification Program, known as HAMP, and the Troubled Asset Relief Program, known as TARP. However, the success of these efforts remains a subject of debate, with some arguing that they fell short of effectively addressing the underlying issues. While the banking sector has often borne the brunt of blame for the financial crisis, it's essential to recognize that the roots of the problem extend beyond banking institutions alone. Factors such as regulatory failures, housing market speculation, and broader economic conditions also contributed significantly to the crisis. Therefore, attributing blame solely to the banks perhaps oversimplifies a complex systemic issue. Be sure to critically evaluate the role of the banking sector in the crisis while also considering the broader context of economic and regulatory factors as you complete this project. The rapid rise and subsequent sharp drop in 2008 housing prices. For this part of the project, be sure to discuss the phenomenon of rapidly rising housing prices followed by their sharp decline. In particular, you should highlight the significance of this trend in signaling the formation and the subsequent collapse or burst of the housing market bubble. Chain reaction to other financial markets. Explain how the collapse of the housing market triggered a chain reaction that spread to other financial markets. In addition, discuss the interconnectedness of various sectors within the financial system. Collapse of banks and financial firms. There were consequences of the housing market collapse. Be sure to address the failure of several banks and financial firms as a result and examine the systemic risks posed by the interconnectedness of these institutions. As you explore the subprime mortgages and loose lending practices, be sure to note how those fueled the housing market bubble. Discuss also how these risky lending practices contributed to a proliferation of toxic assets within the financial system, which led to a liquidity crunch or crisis for the banks. So describe this liquidity crunch as experienced by the banks when they struggled to meet their own financial obligations. Your paper should highlight the implications of this liquidity squeeze for the broader financial system. Blind investor speculation was another phenomenon where investors jumped blindly into the housing market, enticed by the availability of easy money, low interest mortgage loans, etc., and discuss the role of investor speculation in making the housing market bubble worse. This housing market bubble from 2008 was characterized by a rapid escalation in housing prices, followed by a steep and sudden decline, much of it fueled by speculative buying and relaxed lending practices. The collapse of the housing market triggered a domino effect that rippled throughout the financial system and impacted other markets and institutions. With everything being so interconnected, the systemic risks were exacerbated by the housing market downturn, leading to the failure of several banks and financial firms. Subprime mortgages, characterized by loans extended to borrowers with poor credit histories, played a significant role in inflating the housing bubble. Coupled with loose lending practices, these subprime mortgages contributed to the proliferation of some toxic assets within the financial system, further destabilizing markets. As the housing prices soared, many investors blindly jumped into the market, attracted by the availability of easy, low-interest mortgage loans. This speculative fervor further inflated the housing market bubble, ultimately leading to its inevitable burst. Subprime loans and borrower characteristics. In this section of your paper, be sure you discuss the prevalence of subprime loans extended to borrowers with low credit scores and/or unstable income sources. You should highlight the risks associated with lending to this particular consumer demographic. Regulatory environment and questionable loan practices. In this section, examine the role of lax regulations and government standards that permitted banks and lenders to engage in questionable and perhaps even unethical loan practices. Discuss the implications of regulatory leniency on lending standards and risk management. Next, focus on the impact of the economic slowdown and the ensuing layoffs. You should explore the consequences of the economic slowdown in 2008 and the onset of layoffs linked to mortgage defaults. Be sure to discuss how layoffs perpetuated a cycle of economic contraction, leading to a recessionary environment. You should also include a section on the bundling and selling of mortgages as securities. In this part of your project, explain the practice of banks bundling and selling mortgages as securities on the derivatives market, primarily on Wall Street. Be sure to also discuss how this securitization process transferred default risk from the banks to the investors. Included in this slide deck is a list of references you may wish to locate on your own and incorporate into your project. Remember to use plenty of APA references to support your writing and include many in-text citations throughout your essay. This concludes round 1 of final project tips. Stay tuned for more to follow. We'll do more of these each week, and I will see you online. Bye for now.